Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, November 11th, 11/11. And not surprisingly, we're gapping higher. This is the sixth upside gap of the month already, and it's our 111th gap of the year. 71 upside, 40 downside. So 11/11 and 111 in gaps. Incredibly. First and foremost, I would like to thank every veteran that served out there, both that have passed away, current, retired. Thank you for your service to this country. Without you, guys and gals, this country would not be what it is today. So thank you very, very much. So what is going on this morning in the markets? Well, let's put it this way. We've come out of an inside month now, 2 days in a row. Monday and Tuesday. Monday was with a tremendous gap. Yesterday we traded back and forth through it. 2 days in a row we've closed literally pennies above last month's high. So the question we have to pose to ourselves as we attempt to come out of it again today is the third time the charm, where we're going to get above last month's high, get acceptance, stay above it, and start chewing away at Monday's huge range, or do we fail and finally close below it and the sellers say enough's enough, you had your chance, and the third strike, you're out? All remains to be seen. Should be a fun day today. We have a battle right now going on inside of M's range from the 9th. Here's your price probe and price spike. For me to have any kind of change and the bulls to get back into control, we need to get accepted above M's range from Monday. Plain and simple. Plain and simple. If they can't do that, nothing's really changed. If they're able to do that, and especially hold a gap, if we have a gap this morning, well then, slowly but surely, we could start eating away at this large range and make an attempt at the all-time highs. So, destinations and a game plan. So right now, on the upside, again, now we have 75 minutes to go prior to the opening. So a lot can change. So this is all preliminary destinations and game plans. But right now, I will not use yesterday's high on the upside. So we have three. Well, let me see something. I apologize. I'm just looking right now at some of these numbers. I'm not using yesterday's high, but we have L's low, 358.06. That's the price probe, and then right above that is the price spike of 358.67. So 2 levels there that have to be overcome by the bulls. Now, we also have right now the pre-market high of 357.17. Then above that, if we are able to get, until we get more market-generated information, if you're able to overtake this, you don't have anything to the day's high. Now, yes, you have a POC that was 8 wide. I'm not going to totally discount it, but I like 9 wide. But that is something that shouldn't be as big a speed bump. And I apologize, the afternoon rally high of 362.14 from the 9th, and then 364.38, the all-time high, and 366.77, the pre-market all-time high. For the downside, if we do gap higher, we will use yesterday's high of 355.18 as our first downside destination. Then we have 353.48, 11 wide. So if you fail this gap and get accepted back into M's range from yesterday, you will trade back to that POC. Right below that is the overnight low of 353.02, 352.22 afternoon pullback low from yesterday, and 350.51 yesterday's low. Game plan for this morning. Well, people will be screaming, gap rules apply, but everything has to be put in context. First and foremost, this gap is getting a little bit too big for me. That's number one. If the gap is $1 or less, I don't mind taking a call play. I have better risk reward, and then I see if we can eat more away of M period from the 9th. You start opening in the middle of M, or even towards the upper end of it, I have to now be aware of a possible price inventory adjustment. So I don't want to be long, and have to see if sellers are there at L's low and D's low from the 9th. That's where change took place. We were 8 wide. They were all happy until L&M came down and change took place there. So we have to see if there's going to be sellers there again. So right in the middle of this range, there's no play. If we're to open closer to L's low, or between L's low and D's low, I would take a put play. Not because the market's bad, because I want to see how we react and if there's sellers there. My out would either be D's above D's high, or certainly any acceptance above M's high if we start one-time framing up in B period. So that would be a put play. If in the next hour and change we come back in a bit where the gap is more reasonable and my risk reward is better, I would take a call play and would be out if the gap fills. 2 early plays. Again, CamelbackTrading.org's voice channel room is giving you this all morning and day long. And then chart-wise, here's the monthly 4-month balance, 350, 402. That's the key one right now. Buyers need to get acceptance above that inside month up and stay above it. If they do, then the next step is 358.75, the previous all-time high, and then this month's high. Weekly, we're up. Even though the gap was filled yesterday, I'm calling it up. Again, they have everything in their power here if we're able to get and stay above last month's high and get above the price probe. And then on the daily, we're firmly in balance. So right now, so here's today, pre-market. So we're going to use, right now it's a 3-day balance. Yesterday's low is the bottom of it. Monday's high is the top of it. It's a nice big balance, 364.38, 350.51. So it's a $14 balance we're dealing with right now. Good luck trading today. Have a great day, and we'll speak prior to the opening. We'll speak after the close at 4 p.m.